Hello and welcome to Money Discourse. Man, I feel absolutely shafted in the last couple of weeks. Since we started this podcast, things have just been going to shit.
I think I've single-handedly brought down this market,
Exactly. What do we have for today? Liz Truss trying to take Lewis's number 44, the amount of days that she had in power. And we've got Tesla and Snapchat earnings. Rajan, just take it
overall
away.
bearishness. Again, every week doesn't disappoint in the news. First of all, we do have this overriding inflation talk. Still, we've had inflation at the UK, which came in at 10.1%, or was it 10.2? But it came about 0.1 above consensus. But the core, following on from the US, came in 0.2 higher than expectation. So that put a bit of a damper on the mood yesterday. Inflation just not subsiding anywhere, really. And that follows on from the inflation number we got last week, in the US. Then on top of that, we had Liz Truss resigning after Kwarteng resigned, got pushed out really last week in what's becoming a huge mess in the UK. That's the biggest, I can't remember seeing a turnaround the way that we've just seen in the UK government. Literally Liz Truss, she's lived through two monarchs. Well, she served as PM through two monarchs, more than any other prime minister so far. So she's got that going for her. But number two, she managed to come in like a bull in a china shop, announce all of these tax cuts, but with no plan on how to pay for it, no OBR forecast, nothing like that. Just, I'm going to cut this, and this, because we should not be paying more taxes. The market absolutely punished them. The gilt market, as we talked about before, yields went through the roof. Pension market was in trouble. It had to be bailed out by the Bank of England. We had actually comments from Cunliffe, I believe it was today. Yes, it was today, saying that they had no prior warning about the actions that the government were going to take. So the Bank of England were in the dark that these guys in the mini budget were going to cut everything. And so it caught them off guard. So there was no coordination. They just did it. They just went ahead. And, it just shows such naivety and just bad. How she even got the vote, I don't even know. Should have been between Rishi. Rishi was the safe one, but the Conservative, again, remember, people didn't vote for this. It was the Conservative Party, and then Liz Truss actually won quite handsomely, and I guess they all regret that now. So now we've got new leadership race. Votes are going to start on Monday. We've heard that Rishi is going to put his name in the ring. Boris Johnson, another comeback. Can we get the comeback of Boris? He apparently is going to be putting his name forward. I think Mordawan as well. So again, we're looking for the third leader so far in this term. And the thing is that no one can call in the Conservative Party a general election because they're trailing Labour by 30 points plus. So it will be a whitewash and they'll lose power. So they have to keep on going through these leadership changes. So let's just see how it works around this time. But that is just the beginning. The thing is, the turnaround did help the pound a bit. It went up to like 112, 113. It sort of settled the gilt market a bit. I think we're just at around 4%, slightly below 4% in the 10-year. So, but the thing is that we're still just seeing so much weakness, and especially earnings. We had all the bank earnings last week, which generally came in not bad. We saw some good bounces in Bank of America and JP Morgan. Goldman Sachs reported strong earnings as well. So the banks reported good earnings, but we had Tesla that missed on revenue, which we'll talk about. But just moments ago, we saw Snapchat. Now, Snapchat, on the surface, they actually had decent earnings, right? So they actually, if we look at Snapchat right now, they actually reported 8 cents which was a beat of the 1 cent estimate, and revenue came in line at 1.13 billion, and they authorized the $500 million share buyback. But the thing that really tanked the stock was the actual average revenue per user, which fell 11% year on year to $3.11. And then an investor letter that they sort of hid away, but the journalists actually got it. They guided their fourth quarter revenue flat, which implies a level that it's slightly below consensus. And what the commentary basically that came out of it was that advertising partners across many industries are decreasing their marketing budgets. And that is what led to Snapchat absolutely tanking, and we saw it. Snapchat's down around 24%. Bear in mind that Snapchat is actually fallen 30% or more in the last 3 out of the last 4 earnings reports, and now they've dropped another 25% again. If this ain't a dog with fleas, I don't know what it is. And obviously Facebook and some of these other social media names, they've all followed suit. Facebook is down back at 125. So social media names all under pressure right now. So not looking good for Snapchat and these earnings, and it's not looking good for the tech sector. This tech sector just cannot get under its feet. It's just constant disappointment. And next week we obviously got Google, Amazon, Microsoft, and Apple, and we really need some of them companies to bring the goods. And I remember saying that last quarter to sort of save us, but again, here we are. But just the overall sentiment is just so bearish right now. It's just unreal. I mean, you have a bus app. How are you seeing the advertising on from where you stand on your app?
Yeah, well, the craziest thing is that we've got more monthly active users than we've ever had, but advertising revenue is down. You can see the big campaigns are being scaled back. When you're reliant so heavily on an advertising model, you can see what's happening to Facebook and Snap and all these other guys, that especially with the iOS 14.5 changes where, they kind of blocked the advertisers from tracking. We're in a situation where, a lot of the potential revenues are just gone, and Apple knows this, and this is what their intention was. And if you actually look at it, Apple is now profiting from advertising more than ever before.
Yeah, that's
if you look at their revenues,
say, yeah.
But obviously with multiples on Snap, Meta, and all these guys, they're just bound to fall. And especially just with the low confidence market that we're in at the moment, quite painful for the foreseeable until the Fed make a U-turn or slow things down.
No, talking about Apple, you did see that news where Apple is now starting to become, much more into the advertising space and is starting to sell ads on some of their services like that. So it's all part of the plan. Block the others, now getting their own pie. It's clever because where other parts of the pie is shrinking, Apple's service side keeps on growing, and advertising is a great opportunity for them. And it's all part of the plan, really. Keep it within their ecosystem as they normally do. It's wild. And when talking about the rates, it's like I finally switched my bank account from Chase to SoFi, which are offering 2.5% interest on checking accounts. So why not? How do you beat inflation? Get the high cashback credit card with an interest-bearing account, and then you keep on doing that, and then you're beating the game a little bit. It's just it's the only way right now, But I mean, like you said, these advertising companies are just getting absolutely smashed. Snapchat used to be a $100 billion company. It's now, with today's move, it's going to be around 15 billion. So that's about 85% from the high reduction, which is just insane. I mean, but was it ever worth 100 billion? No, of course not. But is it worth 14, 15? Well, the market says it is right now, so I guess it is. But it seems like, wow, the rate at which the destruction has been happening, it's insane. $8.50 stock after being around 85, 90 at one point. So it's a 90% drop from the high, actually.
But you remember in one of our previous episodes, we were talking about our concerns with quantitative tightening, and you're seeing all the Fed liquidity issues as they are right now. What's going to happen? I mean, I don't think our financial system can handle this much being taken out of the market.
It's been a bit of a disaster of a week. Tesla, Snapchat, Meta, pretty much most of the things. If you're long anything tech, you've been hit, and some more than others. I've seen Exxon outperform as oil is outperforming, but even nat gas has actually gone down back into the $5 range in the US. So again, nat gas, you're getting a lot of these commodities still all coming off, but it's just a tough time. But the thing is, it's such a weird paradigm right now, because if you're watching the market, the stress is unreal, especially if you're long, right? You're seeing it, you just think the world is ending. But if you have no idea what's going on in the market and you don't follow it, you just carry on about your normal day. You get paid, you do whatever you're doing. The job market is so tight right now. It was funny that actually I actually had a doctor's appointment yesterday, and the doctor was telling me that they had to get reviews on their staff, and he refused to give them because he goes, it's so hard to get staff right now that I don't want to give no one a bad review, because even a bad member of staff is better than no member of staff. And they're just willing to just keep whoever's willing to stay there, purely because it's so hard to get these labor right now. So the thing is, the labor market is what's allowing the Fed to do what it's doing. The jobless numbers just will not budge. It's staying at this very low level. Employment, jobs keep on getting created. And the Fed, they actually said last week that we need the labor market to sort of subside a bit. We want the job gains to be around 100,000, not the 200 to 300,000, which is happening right now, because the labor market is really, really being stubborn right now, and it just is remaining really strong. And the Fed is trying to crash it. It's trying to crash it because without reducing the amount of jobless, the recession is hard to really get into full force with the level of employment there is right now, and because so many people are employed and the labor market is so tight, it's allowing the Fed to carry on doing what it's doing, because they have their dual mandate, employment along with inflation control. And I mean, they pretty much said it last week that we're trying to kill this economy, and it's difficult to do. And that's saying something right now, and this is our problem. Who would have thought this is a problem? Too much employment right now. It's just wild. It's absolutely crazy. But let's switch on to inflation, right? I just want to bring up this commodities level. And if you look at a lot of the commodities right now on a year-on-year basis. So we look at crude oil, it's now up 5% year-on-year. Brent up 9%. Natural gas is almost flat year-on-year at 3.7%. Gasoline is only up 7%. We've got heating oil, coal, and European nat gas, which is still up 43%. But at one point, European nat gas was up over 300%. UK nat gas is almost flat. It's up 6%. But as of yesterday, it was actually down 5%. But we saw a 29% increase today. But you look at ethanol, you look at all of these commodities, silver, copper, steel, iron ore, gold, it's all down. HRC steel, titanium and lithium are still up, but you look at soybeans. I mean, all of these gains now, they've been reduced so much that in terms of the producer side, we're going to see these costs all going down. But obviously on the consumer side, with the CPI, these declines in commodity prices and input costs is going to take time to filter through the system. Same with home prices, same with home sales and rent. Like we spoke about this before, and a lot of this is lagging data. So while the effects are happening in real time, we're not going to see it through in the data until maybe about 3, 4, 5, 6 months time. And so while that's happening and the Fed going at the speed it's going, they're just going to keep on raising rates until, like I said, I don't know, it could be too late.
Breaks the camel back.
Yeah, break the camel back. I mean, I'm not saying things are getting cheaper right now, but clearly looking at just the futures prices of these commodities definitely is subsiding a lot. And I would expect to see that eventually filter through to the main CPI reading, because these are the underlying inflation levels that are affecting all the countries right now, food costs and stuff like that. I mean, but the thing is that a lot of it's to do with with milk, for example. 1 gallon of milk, you go to a Target, they're charging $3.99, but supermarkets are still charging $4.50. So why haven't they dropped it 50 cents? That's 10%. But nope, they're still keeping it at $4.49. So these supermarkets, some of these people, I do feel they're still price gouging a bit and taking their time to reduce these prices as it's filtering through the system. But this is where we stand right now. So I am optimistic that we will see inflation decrease, and by Q1 next year, we'll see it in a much better position based on the prices happening right now, barring any type of nuclear type scenario with Russia or anything like that. So so I'm looking at milk right now as well, just 22% year on year, which is big, but it's down massively from what it was. So I'm optimistic that we will see a turnaround pretty soon, but it's right now we just have to live through it, because it's pretty relentless right now. But let's move on to Tesla. So Tesla, wasn't the best.
So, well, the thing is, Tesla reported all-time quarterly records for revenue, operating profit, cash balance, global market share, and free cash flow. And it beat its Wall Street EPS estimates by around 5%. But how has the market rewarded it? 52-week low.
No, but this is the thing. No, but I've said this to you before. With a stock like that, which was priced the way it was priced, only perfection will do. You can't be worth $800 billion and miss on a number. And I've said this before, that the moment they miss, regardless of if it's a record or not, it's a record relative to what it's valued at. And so now it's, I don't know, what's it worth, like 600 billion or something, but it's still like 4 times, 5 times more than any other automaker. So it's still being priced at a big premium to virtually every other automaker out there. So this is what it is. So despite the number, it is just relative to where it's at. This is the problem.
No doubt. I mean, it took Tesla around over 11 years to break even after IPO, but only 3 quarters to add $9 billion. So that was a good tweet. So 500,000 Model Ys have been sold this year, and it's on track to deliver 760,000 by the end of this year, making it one of the 5 best-selling vehicles in the world. So obviously Tesla doing what everyone didn't think was possible a couple of years ago, and Model Ys outsold the F-150 for the first time. One of the most exciting things that I heard on the call was that they're expecting to sell about 50,000 semi-trucks by the end of 2024. Obviously, around probably about a $200K average sales price on that, or around the $180,000 to $200,000 selling price on one of those. So that's going to be a huge revenue driver. Cybertruck, it looks like, they've finished their development work on that, and now they've gone into tooling. So hopefully in the next 6 to 9 months, we should see that hit. They did iterate that they're going to continue on the 50% growth trajectory for deliveries and production. However, Elon was talking about it in a kind of long-term fashion, saying that, you know, some quarters is going to be less and some is going to be more. So obviously this year they're not going to hit that. So maybe they'll hit like 45,000 if they're really lucky. I think in terms of the delivery explanation that they gave, you know, they're trying to smooth out the deliveries. It makes sense because they're saying that there was enough boats to, you know, export all of these vehicles, and obviously he kind of dodged the question slightly in terms of China demand. But the thing is, Norway, I think from the beginning of next year, are going to start charging VAT on their EV sales, so they've got a big backlog of orders that literally everything from China that's not, like, maybe not selling because they're hoping for a price drop, can just go straight to Norway. So, but then there's this whole logistics challenge of getting that many Teslas on a boat, right? Because, you know, and obviously we've got demand kind of pushed to the new year as well because of the EV tax incentives that they've got. Tesla are obviously going to benefit from that quite a lot. So we've got an epic kind of 12 months ahead for Tesla. However, stock price, maybe deservedly so, is priced very fairly now. I think even I would say it's slightly oversold, and I think that one of the main drivers behind that is obviously there's Elon, who potentially is going to sell maybe another 5 billion worth tomorrow or Monday or Tuesday or something like that. That's the rumors, to just basically shore up enough financing so he can complete on the Twitter deal on Friday. I expect, and some of the other analysts have said, you know, that Tesla's going to actually get a nice bump as soon as that deal is completed, because there's just that overhang, people front running his sales. It's 5 billion is like 1% of the float. And another really big thing that Elon was doing on the call was he was kind of pumping the stock. So that really makes me feel like he needs to sell. Out of his earnings package, he's got about 9 billion left of dilution that they're going to do in stock he's going to get. So maybe he might have not had enough margin at the current price, because obviously Tesla has come down like 50% from the highs. So he might not have enough margin to actually purchase Twitter on margin. So potentially he has to sell a bit more, but then maybe if he then gets the 9 billion, you know, you have enough margin. So there's so many questions around it. And even though there was the S&P inclusion, we have this Twitter overhang, and I think that institutional pension investors right now are thinking that Tesla's a bit too risky right now until things settle down. So that's why we haven't kind of seen a big bump. But yeah, in that pump that he was doing, he was saying that Tesla is potentially going to be worth more than Apple and Saudi Aramco together.
For me, it's a red flag when they start trying to CEOs talk about, we should be worth this. Just let your product, let your earnings and everything do the talking. You know, if that is the case. But anyway,
this was an interesting tweet.
What happens on that one.
This was an interesting tweet. He was saying, like, in 2015, obviously Elon was pumping, saying that Tesla would reach 700 billion by 2025. He obviously did that 5 years early, and now he's saying that Tesla is going to reach 4.4 trillion. I don't know, probably by 2030 or something like that. Market cap potentially is possible. But one of the interesting things he said around 50 or 45 minutes into the call, he said he envisages this without Optimus. So he's super bullish right now on the stock, and this is why they announced buybacks as well that they're going to be doing next year. So obviously not any kind of respite for us investors right now, but obviously that's only going to be 5 to 10 billion. It's not really going to move the stock a lot, but if you're thinking about risk adjusted opportunities for Tesla, what do they do with their money? Do they buy Bitcoin, or buy back their own stock? And if it's at these type of levels or lower, or even a little bit higher, it's probably a bit of a no-brainer. And one of the last things is that they're not going to be doing share dilution for their new employees as default. The cash compensation is going to be the default for them. So we're going to start seeing that stock dilution for employees kind of go down in future earnings. Another bit, you see the media saying that Elon admits demand woes, but they're saying that they're going to sell every single car that they make. But so I don't understand where this comes from. Obviously, the market takes that on board. Another thing is that now Tesla has the third strongest balance sheet among the top 10 Nasdaq holdings, just behind Google and Microsoft. Yeah, they're doing phenomenal. Like, no financial advice or anything like that, but if you haven't got any Tesla, it's not a bad price to be buying it at, because they're just a cash generating machine now with 21 billion on their balance sheet, and that's just going to keep on growing and growing. Because if you look at the insane capex that they're doing right now, they're spending wherever they can, but they're still growing their balance sheet. Like, it's just amazing what they're doing. So yeah, let's see.
There's a lot to to be honest, right? There's all of this was there already. Like, the reason why it was sort of priced where it was is because of all of this hope and demand and stuff like that. In terms of valuation, it's always a different game, because I've seen companies that are making everything's about a multiple. And when you get to that sort of level, you know, and if they get to that level of maturity and you get a 20 multiple, like if you get the same type of multiple as Apple, they've been to get 4 trillion valuation, need to be making about net profit of around 200 to 300 billion dollars, which is a lot. But you know, you never know. Like the thing is that it is where the demand is. I mean, it's the new way things are going forward. The one thing that makes me feel like it's possible, because still EVs is a very small percentage of the overall amount of cars on the road. But to have this sort of ramp up in EVs, the infrastructure has to be massively different. Like it can't be in its current form. Everyone having an EV just wouldn't work. You know, spending 30 minutes at a charger, you know, it just can't happen. So for this whole move to happen, the whole infrastructure has to obviously change. And along with that, already. Yeah,
slowly changing. I mean, the thing is that like there's just, I mean, the battery is the limitation right now. So you know, we saw
lithium prices up over 100% still. So.
Yeah. So Tesla, obviously, you know, getting into the lithium mining game as well. They're trying to push the regulators to try to get their permits so they can mine it. But obviously, environmentalists are going to go crazy. But the thing is that the way that they're planning to mine the lithium is like they're not going to really be disturbing the land as much. It's like kind of just taking it out of the soil, because lithium is literally everywhere. It's just in low quantities. So anyway, let's see what's going to happen. Like you said, it's all about the multiple right now, and those are compressing. And you know, I would have been surprised if the stock did like a 10% gain. I don't think that the market's just ready for that right now.
What it is, Tesla, you know, it's likely to just. It's going to be in this range. In fact, it's been in this range. It went from 600 pre-split up to 900, back to 600. Let's see if it can hold here. And you know, the thing is just play the range. You know, but I mean, let's look at the market going forward. We've got our trusty chart. Seeing the S&P. The one positive thing is that we had this really sharp downtrend, going down all the way from 30, just over 4,300, and we sort of leveled out at where was it? About just above 3,500, and we had that massive snapback. I think it was just after the CPI where we went down 500 odd Nasdaq handles, and we ended up 200. It was actually the biggest turnaround. We spoke about this, but it's one of the biggest turnarounds we've had in the market for. I think it was like the 4th biggest turnaround of all time in the Nasdaq, and so that was that bar here. Then we followed Friday by a really big down day, and then on Monday we had a good day, and then we sort of chopped back, and then we've had 2 down days again. But we're sort of edging on this lower, the outer trend line for this downward trend. So I think if we can hold like 3,600, it could be forming a base, hopefully, that will allow us to at least just meander and maybe hit around 3,800, which was the previous high back in early October, and then maybe push towards 3,900 in the bull case. But if we continue to go lower, the first test would be getting back to the low, which is about 3,500, which is about 4 or 5% lower. So hopefully we don't do that. We've obviously got the earnings, and I think that you've got to assume that a lot of the bad news has been baked in. But then that's what I thought about Snapchat, and Snapchat is down 25%. I mean, Snapchat was a $10 stock and is now $8.50. So I mean, I guess you know, whenever you think you know, this can't go much lower, the market slaps you and knocks it down another 20%. So we just don't know how much more these can actually go. But yeah, I mean, we'll just see how this all works out again. But
it must be so tough being an employee of Snap if you had like been in employee purchase plans and kind of like invested part of your salary into the company that you work so hard for, and then seeing this, you know, like the morale, even at Tesla or any of them, like it just must feel so bad.
AMD was 150, it's now below 60. Nvidia, which was over 300, is now 120, like below 120 or 120 or something. And virtually all of these stocks have seen such massive declines, and I could imagine so many share options are worth 60-70% less, and it's part of the game. Like when you have share options, you benefit when, you know, the stock market goes up. And again, so you know, what does this show you? It doesn't really matter what the company is doing, just look at what the Fed is doing, and as long as the Fed is doing this easy policy, then your stock options will do well. And but again, I think, you know, we've been saying it, a lot of people have been saying it, and I think, you know, around this level, I think longer term it's good. The real problem is just how much do you have from higher levels, and realistically, in my opinion, just my opinion, that only by averaging down a little bit that you can salvage some of these positions. Because if you just have these mega high prices from a year ago, you might not see those prices again for another 5 to 10 years, and that's just a lot of lost time. But obviously, it's difficult to always have the capital to do it. And, you know, I basically can't really buy much more. And you know, you've seen some of those who are following the option portfolio, you know, it's doing quite well. And then sometimes you can't defend against some of these massive moves lower, 20-30% lower. AMD going from 90 to 55. Like, how can you even defend against it? Breaking out all levels like it doesn't mean anything. But again, I think, you know, we're midway through October, coming into November. Hopefully we do see a Santa Claus rally. We didn't see one last year. Last year, November was the peak, and then we kept on going lower. So let's just see. We've been depressed this whole year, whether we can finish the year on a good note. And
and
so
remember
we're
one
getting in
thing.
that level.
Remember one thing is, it's not about what the actual reality is. It's what they tell you they are focusing on right now, what the mainstream media, what the Fed tells you they're focusing on. So when inflation was high last year, they weren't doing anything about it. But just because they are now making it a focus, they are like literally trying to kill us all. But and it's not just us, it's obviously emerging markets as well. You know, they're finding it really hard to even just sell bonds, or like, you know, try to raise financing. It's super tough for the whole world right now, and that's all down to the Fed. And obviously they need to get inflation down, no doubt. But
the Fed and just central banks in general, like all the central banks are all on the same path.
But if you look at Bank of England, they're saying that maybe we're not going to raise as much as we said we were. So
they have to protect the pensions under so much threat.
Yeah, of course.
Right?
This is it. I mean,
but this is part of it.
Yeah, exactly. So this thing, like the Fed also have to look at the broader picture as well, and at least let their rate rises take effect so they can see what's going to happen instead of just keep on raising. But again, it's not like they don't know this. I'm sure loads of people are shouting at them. Wall Street guys are going crazy at them because obviously, you know, their portfolios are all down or whatever else. Like you said, it's hard to defend against these things unless you know it's coming. And especially all these ETFs that are like, you know, you have to invest whatever comes into it. You know, you're obviously going to be doing it at much higher prices than it is now. So like it's not like you can just hold a bunch on the side. And yeah, Kathy Wood has obviously been going crazy about all of this, and I'm sure
Kathy
they've heard
Wood
of
needs
what
to do
she's saying.
whatever is possible to rescue her fund. She's down on a 5-year basis now. So, you know, it's just, I just don't know a stock she has that, I mean, just Kathy Wood. You know, to be honest, she had 5 minutes of fame, and now clearly her strategy is just not. I mean, she's getting most of her portfolio is full of negative cash flow, loss-making companies, which is not being rewarded in this market.
Yeah, so we'll see. I mean, the thing is, like we said last time, what she's saying is not wrong. I mean, maybe with the companies that she's investing in is not right for this type of market, or you know, but what she's saying in terms of the Fed needs to slow down a little bit is true. But again, that's not the.
I think we got now 75 basis points next meeting, but the real one is what happens after that. Is it going to be 50 and then done? I mean, hearing some of the comments, they're saying it's likely they won't pause until next year, which obviously will make sense. Again, they just need to see these numbers. Like when these sort of price drops and everything starts to filter into the main CPI or even the PPI, then again, I think you know it will you know help this market a bit.
But the thing is that the owner's equivalent rent is one of the main factors in there, and it's so lagging, and it takes up such a big weighting of the CPI and the way it's measured is just still so archaic that it seems like it's not going to be until the latter half maybe of 2023 that things will the data will start showing that in terms of CPI numbers again. But you know what, all it takes is the Fed to say, hey, look, we're seeing commodity prices come down, we're seeing all of these things coming down, rather than actually focusing on the CPI number itself. But you know what, it's just such a shame, because like when a economy is prospering so much, I mean, like, do you really want to see your citizens out of work? You know, do you want to see a 10% unemployment rate? Do you want to see people
I think, you know, for them
going for benefits with lower tax receipts and then obviously they're borrowing at like some crazy rates right now. They're shooting themselves in the foot as well. But
it's a big conundrum right now, because you've got the government. You see, the problem with these banks and government, that they're all working in different spectrums. We've got the US midterm elections coming up. Obviously, Biden wants to tout a healthy economy, but yet the Fed is trying their hardest to smash the economy. And so these two are at loggerheads, but the Fed has to remain independent. You know, I could just imagine if Trump was in power, he'll be calling up the Fed, going, cut the rates now, mate. You know, just it's just one of these things where, like, the government, the Fed, the central banks, they're all just on different paths. We're still seeing austerity in Europe, you know, with these capping energy bills, and that's austerity. Meanwhile, while the central banks are all raising rates. But on that note, we'll call it one for today. Please
subscribe. Like, we've got a decent amount of subscribers over the last week or two, where we've had some popular videos. But like, if you're watching and you're not subscribed, please just hit that subscribe button. It means the world to us. And do us a favor and hit that like button, and actually just leave us a comment if you want us to discuss anything, if it's to do with your favorite stock, or something that you're looking to get into, or just you need our opinion on anything. Just please put it in the comments. Would love to engage with you guys. Let's pray for better days in the market and our portfolios.
All right, we'll catch you on the next one.